Hey guys, Paul here with week 4 review. Run through the trades for week 4. Overall, we're pretty much dead break even. End the week 12,030 and 82 cents, just below 20% return overall. So the last 2 weeks have been pretty much flat weeks. We had 6 losers and 4 winners. 2 of those winners though were closed out at 1-to-1 risk reward rather than 2-to-1. And then 2 of the winners we took 2-to-1 on, so we took 4% on 2 of them, or 8%, and 2% on the other 2, giving us 12% overall. And we took 6 losers at 2%, which lost us 12%, so dead even. Had a US yen long off this inverse head and shoulders. Was triggered, a little bit of drawdown, ran nicely, and then reversed really hard. Could have traded it with a stop there rather than as deep as I had it. You could have got in 60 pips. You could have also been a little bit closer, perhaps with your entry, but you could have tried to stop up to here as well, potentially below this low rather than. Which would have given us, 40 pip risk, and we got about 40 pips worth of profit. So you could have nearly gotten a 1-to-1 out of that trade. So this is where shooting for higher targets can be frustrating when it does start to move in your favour and then reverses and takes you out. Anyway, pound USD, we had a short on this based on a bear flag, something like that happening. Took a short, dropped right down to within sort of 10 pips of our profit. Profit target was there. Target was here, so it dropped right down close to it, reversed all the way back, came right back down the next day, pulled back up, dropped a little bit more and formed this wedge, which I didn't end up trading and stopped us out. So it actually formed a nice little wedge in here, which I then didn't take, so we lost 2% on that. I didn't take this, could have taken a long there, stop here, again that would have given you 1-to-1, but no more than 1-to-1 on that trade as well, so there's another one that's interesting. Seem at the moment seem to be getting a lot of trades where they go for a 1-to-1 risk reward and then they'll reverse, so it might be something to think about going forward. At a channel, it really extended quite long, this channel, wicked down on the euro pound, it reversed straight away and took us out. I tried to stop down as it was mucking around in here. It would have taken out the stop above these highs anyway, so having that higher wouldn't have helped us out. Lost 2% on that. Nothing on the euro, even though there was a inverse head and shoulders in here. The neckline sort of through here, breakout, and possibly a 1-to-1 type move. We'd still be in it, or entry would have been above this high here, somewhere here. Stops there, 40 pips, 50 pips profit. So could have gotten a 1-to-1 out of that, which I didn't take. New Zealand USD, another inverse head and shoulders here, which I didn't take. Didn't actually really see it in time. This is going to happen live anyway. If you're trading something like this, you're going to miss out. But there was an inverse head and shoulders there. Again, would have been profitable. Missed all the profits this week. You might have had sort of a 40 pip stop on that. And you wouldn't have got filled on a 2-to-1 target of 80 pips up here somewhere. It would have fallen just short. So another one that would have hit 1-to-1 but not 2-to-1. US CAD, I was looking at a double top, it was sort of almost a triple top, turned into a range bound mess. When it dropped down here, I was pretty much tried to stop to break even and said it's either going to keep going or it's not, and So I stopped out for break even on that one. I counted it in the stats as a full stop out. Guess it would have taken it out anyway. Wasn't a very good double top. Really looking at it, it's not really much of a double top. It was more in a range, so maybe it was a bad read. Aussie, we continued on. We marked this out as a loss on this trade. We held the other shorts over last week. They took full profit on the interest rate announcement. It flicked around, it ran right back up, dropped down. Saved our bacon a bit on the week. A couple of nice short trades on the Aussie. If I had the stop a bit higher on this short, it would have worked as well. But there you go, that's how it works. The setup was potentially could have just stopped right this high, I guess, which would have, maybe my stop was too close. But anyway, it is what it is. Took it out. And then there was a double bottom in here, which I didn't take. Could have been a long here, stop here. You'd still be in it for 2 to 1. You would have got 1 to 1 so far. I probably would have taken it at that because I didn't want to hold anything through non-farm payrolls. Euro yen, we had a short in here from last week on this bear flag. It dropped, it came right back, it dropped again, and ended up travelling right down towards take profit over, take profit down here. I'm not sure why, because the 2 to 1 had 40 pips risk on it. And the 4% was there at 90 pips. So I was targeting 120 for some reason. Not sure whether I just thought it was a good chance of getting down there or why I had it so low, but I realised that Friday leading into non-farm payroll, so I took it off. Pound Aussie, I had a long, was broken on the break of this channel. It got a little bit up and it dropped down, and then on that Aussie use release whipped down, dropped down, took me out for 110 pips. I had still only 2% on it, so 2% over 110 pips. It would have gotten up 1% or 1 times R, and then would have dropped right back down anyway. So you would have got 170 pips. So the 200 pip target was just up here. So I was expecting a bit of a wiki action, and I dropped my target down to 1 to 1 on this, leading into that Aussie news, but it wicked me out, unfortunately. Pound yen, we had a bearish pennant in here. I had my target, my entry down here way low, down below these lows, possibly in hindsight too low. I think I put them in when price was up in here. So that was the nearest low. Potentially should have trailed it up, but I was obviously away from the charts, so that's going to happen sometimes as well. Conservative entry meant my target was down here. It didn't get to it, so I only got 1 to 1 out of it. Pulled it again going in before non-farm payrolls, partly because of that. I just didn't want to hold it through non-farms. Pound New Zealand, another one, would have been a nice profit, but ended up stopping me out, triggered me in. My entry may have been a little high. Rather than, should have been below these lows, opposite of the pound yen. If it had been, it would have been profitable. So that one I feel a little bit unlucky on. Whipped up, drop out. 2 of them this week. Euro Aussie triggered me long on this. Having my target up above these highs, my entry so high up, meant I didn't get tagged on this false move or this false move, and that would have stopped me out on the Aussie interest rate, but tagged me in and fell short of my 2 to 1, so I ended up taking that out as price was mucking around in here. The euro looked really negative, looked very bearish on against every other pair at this point, and I didn't see a point in holding on stoically, purely and simply just to see that all profits were right, so I took it off for 1 to 1. In terms of the system though of holding for 2 to 1, this potentially next week would have held out to have ended up being a loss. So it would have been a really bad week. On the other hand, it could have been a really good week. This one we had a bit of potentially a few patterns in here that I missed, I haven't taken. It was about as clear as mud, but I guess potentially there's a bull flag in here that never triggers. It drops to the downside and form head and shoulders in here, but you've got a really steep neckline, so you might have only just been triggered in here somewhere, and you'd be break even at the moment. It wasn't a very nice trade, I didn't like it, so I didn't take it. It wasn't like this one here where you've got your neckline sloping up and a nice, this neckline is sloping down, so your entry is too far away from where your stop's going to be. It's just not nice. So looking at the spreadsheet, there's our 6 losses. Lost a total of 450 pips, made 345 pips, but because of our risking 2% on each trade, adjusting the size of the trade for the size of the stop loss, even though we lost more pips, we ended up break even for the week. As a 1-to-1 format, we'd have taken profit on the pound USD. Possibly could have found some profits on the US yen, but as a strict 1-to-1, we would have taken profit on the pound. So we would have ended up with 5 winners and 5 losers and been break even for the week. So the interesting thing is, even at a 1-to-1, you'd still get good performance through these first good weeks. You would have ended up profitable on the 3rd week. Possibly could have gotten something out of the US yen trade to get you profitable on the 4th, but you'd at least be break even. So I'm still looking at it. I'm still thinking 1-to-1 would give you a lower drawdown, and potentially easier psychologically. Many of these trades, this one here would have taken profit straight away, whereas you sat through all this mess. Pound yen would have taken profit fairly quickly, rather than having to sit through all this withdrawal. Euro yen would have taken profit here, you wouldn't have to sit through all this mess. Euro Aussie would have just taken profit. Aussie US would have taken profit on this move, and you might have then got another setup in here to have a second go at it. US CAD didn't trade the New Zealand, didn't trade the Aussie much. Euro pound wouldn't have, but pound US, would have just gone straight to the profit. And after this big pullback and then rally up, you could have adjusted your stops and potentially reviewed it, or taken something off to get you some profits. But my thoughts at the end of the first month, so far nearly 20% up. It's not bad for a month's return. It's aggressive in the risk of 2% per trade. The account's never been significantly in drawdown though. It's actually never gone below the 10k starting balance. And the worst it looked on the equity for the week was 11,500. So we were down on equity by $500 at one point, or 5%. Or it's probably a bit less than 5% because we're up at 12,000 now, but 4.5% or whatever. So even for our aggressive 2% risk, taking, sometimes being in sort of 5 or 6 trades at once sometimes, to have an equity drawdown of no more than 5% as being the maximum so far, it isn't too bad. But the psychological edge of being out of the trades a bit quicker, seeing your money compound a bit quicker, and the potential for lower drawdowns on a 1-to-1 risk-reward ratio strategy is looking good to me at the moment. I'll keep it going, and we'll see how we go. Cheers, guys.